Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Sunday, and that means we are speaking with the one and only Mr. Dan Bird. How you doing, sir?
Doing pretty well.
Awesome, man. So again, folks,
Haven't jumped off a ledge yet.
No, you won't do that. But folks, if you don't know, Dan Bird has brought to the channel probably about 3 or 4 months ago. I asked him to help me remove the emotion from trading. So he's been helping me do that for the last several months. He helped me have my first profitable trade a couple of weeks ago, maybe a month ago. But all in all, I am learning alongside you. So our first topic of the day, Dan, has to be the market. Saw the market roll over.
And I'll just add to that you had your first profitable trade, but it's not a time right now that I necessarily recommend being long in anything.
Yeah, no, I'm happy to be in cash, happy not to be trading. Right. I will let the chips fall where they may, a floor to be established and validated before I put money to work. But
exactly.
Yeah, I will just wait on the sidelines and let this destruction, as I call it, happen. So we saw a pretty big reversal Thursday. Jerome Powell, basically, in my opinion, came out and admitted rates are going to go up 50 basis points May 4th. I believe he's also admitted that it will go up in June, which are both things that I have called repeatedly. And then Friday was kind of a train wreck. Options were expiring Friday, so maybe a little bit more variability, but I don't think it's over. But you look at the internals, you see what's going on. What did you see?
I'll show some of that. Actually, here, let me share. I don't think it's over yet either. Kind of prescient, though, that last week you were predicting within 8 weeks a big crash.
I did.
Can you see this?
I can. Thank you.
So this is this is the whole week.
And I called before the start of this a pretty significant collapse in 8 weeks. So we're starting.
Right. Yeah. So this is a 5-minute chart.
Okay.
So you can see each day we start last week, Monday, Tuesday, Wednesday, Thursday, Friday. Yeah.
So we were building into Jerome Powell's presentation. I warned everybody over the weekend that his speech would be market moving. Pretty much he said what I expected him to say. Folks, pay attention. If you gave him truth serum, he would have been screaming at Wall Street. Folks, we're not playing around. We are going to raise rates. You idiots in the stock market, wake up. And I think that's what happened Thursday.
Here's where the alarm bell went off. And just for 2 days straight, just basically all the way down.
Yeah, what is that point wise? What's that? 4,600 or 45?
It's the high here was 45.10 and the low was 42.70.
That's that'll
so
get
240 points on the S&P.
Yeah, that's 5% in 2 days, really a day and a half.
Yeah, that's pretty huge. You can see the way I've color coded this is when the faster moving averages are on top. It turns green up here.
Oh, I got
And when the faster moving ones are on the bottom, meaning it's going down, then it turns purple. And the wider that is, indicates the acceleration of the move. So you can see here, it started on Thursday, crossed over right there around 11 o'clock in the morning, and it never crossed back until about 10 minutes before the close. On Friday, we had a little tiny bounce, and then it just continued down from there. So because it continued down and actually ended at the lows, I'll show you a different view. So there's what it looks like. So you can see here, whenever there's one big solid candle like that,
the lows.
That means it was selling right into the close. It means if the market had been open for 30 more minutes, it would have continued selling even more.
Yeah.
So I don't think it's over yet.
Yeah, I don't think it's over. I called it last week. I felt good about it. I think there's a couple of things, even at these levels, we need to appreciate. I talked about on my daily financial news this morning. First and foremost, S&P 500 still selling at 22 times current earnings expectations. I believe as we get into the depths of earnings seasons, the earning expectation will be cut. In addition, 22 is richly valued. I believe that will be compressed. So you get a compressed multiple into reduced earnings that's why I made the call last weekend, because I'm like, the math doesn't work.
Yeah, that's right. And I mean, the earnings so far haven't been terrible,
But
other than Netflix.
yeah, other than Netflix.
Tesla actually kind of held the market up
Thursday morning.
Thursday morning in the morning.
Mhm.
But one particular name can't hold the whole thing up. So you're right. So
yeah. So the other thing I want to talk about, just because I got you, I flagged 2 earnings next week as ones that have to deliver. Lots to choose from, but I picked Apple, which I think is on Thursday, and Microsoft, which I think is on Wednesday. If either of those disappoint, watch out below. What do you think?
So let's look at Apple. Apple had a big sell-off too on Friday.
Yeah.
They had a sell-off on Thursday, but held up fairly well. But this blue dotted line right here is the mean. That's the center line.
Okay.
So we're below the mean and it's accelerating. You can see here we're at 1.5. Down here is 2 times, way down here. And the other one was Microsoft.
Yes.
Microsoft too had a big sell-off. Everybody did on Friday.
And then Amazon's the other one that reports they could be. I actually think
that's
Amazon
right.
might be in trouble, because I may remember incorrectly, but last quarter's numbers weren't particularly good I think they had a big profit from Rivian or something. Rivian.
Yeah, Rivian. Yeah, the EV.
And now that company is about half the value it was last quarter. So
yeah, and that was a one-time gain anyway.
Yeah, so that gain's gone.
Yeah. So watch the accumulation distribution line down here.
Oh yeah, selling.
Right. So below the pink line, that's the moving average, 50-day moving average. The accumulation distribution helps you understand whether big institutions are accumulating, buying, or distributing or selling.
So they're selling Amazon. What about the other 2? Sorry, I kind of.
So Apple's still above.
Okay, so Apple's all right.
So
yeah,
if I were okay.
If I were gonna pick one, Apple's like the key.
Yeah.
I think
you're right.
$3 trillion market cap earlier in the year. So yeah, they're the big.
Yeah, and Apple's an indication not only of manufacturing and telecommunications, but also the consumer.
Oh, it's absolutely going to be a consumer indicator. It's not a surprise to say Apple products are expensive.
Yeah, right. but they can support the cost.
No question.
So far they have.
Yeah.
Once we start moving towards recession, people will start. They won't get rid of their Apples, obviously.
No, they just will skip.
But they won't upgrade.
Exactly.
Yeah, they won't upgrade to the next one. So talking about internals, here's my favorite chart for the VIX.
Yeah. Oh, it did not spike.
It did not spike. Isn't that surprising?
No, not to me, because I think it may be surprising to many that it didn't spike, given 1,000 points on the Dow. But to me, this is a rotation. This is not fear run to the exits. It's a very different trade, in my opinion.
I would agree to an extent. I do believe it is rotation, yes. And the S&P in general, which is the chart down here on the bottom panel, the S&P is fairly heavily weighted with technology. I mean, it's got a lot of other things too, but it's a weighted index. Let me put it that way.
It is, yes.
So the weighting, the size of the companies that are in the S&P make a difference in how it moves. And a lot of those technology names are heavily weighted. Yeah. So rotation will send it down. However, rotation shouldn't necessarily be reflected in the VIX, the volatility index, especially on options expiration Friday.
Okay.
So what this is telling me is that we are not done yet.
Yeah, you haven't. Well, yeah, to use a term that I look for a lot, capitulation. We have not gotten to capitulation.
That's right. It's like I told my neighbor. He asked me every once in a while. He goes, "Feels like we're at the bottom. Do you think we're at the bottom?" And I said, "Well, as long as you keep asking if we're at the bottom, no, we're not at the bottom."
Yeah, exactly. As long as you keep asking, we're not there.
Right. So the last I saw him yesterday, So yesterday he goes, I'm selling everything, getting out. I don't ever want to go back to the stock market again. I'm like,
Ah,
great.
awesome.
Because he knew that was my criteria. I'm like, great, we can start buying now.
Yeah, exactly. That's funny.
But if you look at where this has what is it, a 5-day and a 21-day moving average.
Mm-hmm.
So the red one is a 5-day, the green one here is a 21-day.
Mm-hmm.
So when the 5 crosses over,
Mm-hmm.
now remember this is the VIX, so it's opposite of the market.
Mm-hmm.
And you can kind of see the S&P down below. You can see when the VIX spikes up, then the market goes down.
Mm-hmm.
All right, so it's a little counterintuitive. But whenever the 5 crosses, whenever this red one crosses the green one right here, that's when the VIX is beginning to go up.
Mm.
And I drew vertical red lines at each point where it crossed.
Oh, okay.
And you can follow those down to look at the S&P to see where the S&P was when it crossed.
Got it.
You see here, crosshair had a little bit more left and then it went down.
Mm-hmm.
Right here across, it was already starting down, but it went down a lot more.
Mm-hmm.
Right here across, we had a big, huge sell-off February, right?
Mm-hmm.
So this just crossed Friday.
Yeah.
It only just crossed.
More pain. That's what that says.
So that's right. So there's a lot more to go. Now, when the VIX, which is represented by the gray one in the back, this is the actual, not the moving average. The moving average will always lag. But the gray one is the actual VIX.
Mm-hmm.
You can see up here it spiked to 36.
Wow.
That was the high. And if you follow that down, that's right down here. It wasn't quite the low, but it was pretty much where the support was put in, right down here.
Mm-hmm.
So that's what we want. That's what we want to see to know whether it's, whether we're going to have another rally. I think we may still have another bear rally like we just had, but I'd be very leery. I'd be cautious of any rally that
I'm happy to stay in cash and not trade. I will just let all of this unfold. I will let everybody rotate out. I will let PE multiples collapse. I will let some companies, frankly, go to zero, and then I will come in and pick up the pieces.
Yes, that's right. And the hardest thing to do is to pick up those pieces when it's at the lows, the absolute lows, because that's when everybody is afraid.
Yeah.
Another one here, this is at the bottom, this is the VIX again. It's another way of looking at the VIX.
Mm-hmm.
So now we got the S&P up here on the top and the VIX on the bottom. Mm-hmm. And there's 2 lines that I've drawn. One is up here where the VIX spikes.
Okay. Yep.
It's up here at 37.
Mm-hmm.
So the VIX spiked here.
Yeah.
And if you go up to the S&P, you can see that was the bottom.
Yeah, clear.
VIX spiked right here.
Close.
It was the bottom. It came back and tested it again. Mm-hmm. But the VIX was actually lower the second time. So that's where it took off. Then when it gets down to this lower one down here, that's complacency. That means people are buying and they're not too concerned about selling.
Interesting.
That's usually the peak. So when it hit over here, it was the peak over here. When it hit over here, we stayed there for a little while.
Yep.
So you can see the S&P was up there.
Interesting.
And then it was at the low in this most recent rally, that 2.5-week rally that we had. Mm-hmm. Up until Wednesday.
Yep.
You can see it was right down here at 20.
Yep.
So that was the caution sign saying that this rally's not going to last.
Yeah. So let's talk about Monday morning, because you just never know, right? So Monday morning,
you never know.
People have had 2.5 days to stare at their portfolios. Maybe they're like your neighbor, they give up. Maybe they're continuing by the dip because it's worked for 2 years. Mm-hmm. Monday's interesting. I don't think there's any big earnings. I think, I noted one earnings on Monday. I forget who it is now, but it's not a tech company. So, I mean, do you have an opinion? Is the buy the dip crowd going to come racing in, or is the rotation going to continue?
So I think we're going to get more selling, because if you look at this, at this chart with the VIX, it's not time to buy the dip until the VIX gets way up here.
Yeah. Okay.
When it gets up in this area, it's only halfway there right now. Mm-hmm. So the selling might only be halfway done. Yeah. So what happens on Monday? I think it's going to be dangerous. This is a dangerous time right now.
Yeah.
I think there's more selling to come. It could bounce in the beginning on Monday.
Yeah, that's what I was thinking.
Which might suck some people in.
That's exactly what I was thinking. Again, this is not financial advice. This is just 2 guys staring at a graph.
Right.
I think a lot of people have been staring at this weekend. A lot of people maybe have a shopping list. They're going to buy at the open. It'll be kind of a suckers rally, and by the afternoon, real selling. The first 30 minutes of any trading day is very dangerous.
Yeah, it's very dangerous because the first 30 minutes and the last 10 minutes.
Yes.
Actually.
Yeah, as they're setting and opening their books. Yeah, exactly.
Yeah, and the market makers have to balance their books. So they market makers overnight with the overnight trades.
Yep.
Typically open it at 9:30 with an imbalance.
Correct.
And they have to somehow balance it. So if they have an imbalance on the buy side, so if everybody over the weekend said, especially the people that shorted this market over the weekend said, wow, if it starts going up, I'm getting out, which means they have to do what? They have to buy.
Yeah, exactly. Yep.
And so that'll add buying on top of buying. Right. And the market makers will then have to figure out how to cover that imbalance. The way they cover it is by shorting.
You got it. Yeah.
So they can cover the buying. And once the buying starts to wane, then the market makers will continue to sell. Yeah. And then all the other people will sell, and everybody put their stops at the low of Friday. And as soon as that low gets taken out, all the selling will start again.
Yeah. So let's wrap up this first episode with this kind of thesis that
a couple more internal charts that I want to show.
Please.
This one here is these two panels at the bottom, the red one and the green one. Those are the the percentage of stocks. The red one is the percentage of stocks below its 50-day moving average. Okay, so this red line up here, this red dotted line is the 50-day moving average. That's the one that most of the big institutions look at and either add or sell. Now you can see we crashed through it on Thursday, and the selling accelerated on Friday, after we went down through the 50-day.
Yep.
The important thing about these two bottom panels is these are the percentage of stocks that are above their 50-day moving average. Of all of the stocks in the market, the percentage that are above their 50-day. Right now, it's a little less than 50% that are above the 50-day. All right. And it's trending down. Yep. Now you can see again where the bottoms were put in up here on the S&P, and then look at where the 50 percentage of 50-day moving average. It's about 25%. Okay. 25 to 30 in all of these cases over here. Wow. Before the market bounced again. All right. We're not even close to that yet.
No, we're not.
So that means in order to get that many more percentage of stocks below their 50 days means a lot more stocks have to sell.
Yeah, more selling.
Right. So we're not there yet. That one, this is the 200-day down below. It's slower moving, but it's gone below the 50 as well. So that's another reason why I think there's still more to go. This is the same thing on the NASDAQ. So that one was the S&P. This is the same look on the NASDAQ. So now you can see it's, this one's well below its 50-day, but it's still not down to the bottom yet. Yep. And it's well below the 200-day. So there's a lot more stocks in the NASDAQ that are suffering. So again, that's why I say it's not quite there yet. This one here is the put call ratio. So the number of puts divided by the number of calls. So when this is going up, that means more traders are buying puts. So they're protecting themselves, or they're betting that the market is going down. So they buy puts. So now there's more put buying than there is call buying. And this is, by the way, goes all the way back to 2005, 2004. So this is a long chart, and it's a monthly chart, I believe. The interesting thing is to look at this big, huge drop right here. You can see where it came down in the past. Came down right here in 2006 before it. So when it's up at the highs, that means everybody's buying. This means people start selling. When it's down, that's why I put the red lines and the green lines in. Okay. All right. So red means people are starting to sell. That happened in 2011, happened in 2014, and then 2020 is right here. Interesting, it's actually higher than these. So there were already a lot of put buyers even before the 2020 crash. But then after 2020, once we had the COVID crash, look what happened.
Wow.
Nobody was buying puts.
No,
everybody was buying stocks. Everyone was buying
the Fed
calls.
broke. I've come to say the Fed broke housing. The Fed broke the stock market. That's what that means.
Yeah. I mean, this is a 20. What is this? A 20-year chart almost. 18-year chart.
The Fed broke.
It's never gone below this line right here until beginning of or end of 2020.
Yeah, and this is why I think
this is all call. Everybody's buying. Everybody and their brother are buying the dip.
Yeah, exactly. Yeah, and this is why I think the Fed is trying to scream, we're not messing around. We're not going to bail you out.
Yeah. So, and what we need in the market is for this to normalize. So we actually need for this.
Yeah, we need more pain
to get back up here near the dotted blue line up here.
Well, we need it to go up from there as well.
Well, not necessarily.
No. Okay.
We don't necessarily need it to go up from there.
Okay.
But we need it to get back up around here.
Okay.
At least. Just to normalize the market. And that's only halfway there from beginning of 22. So we've got still a lot more to go. So all of these things, looking at the internals, all of these things are telling us we're not done selling yet.
Yeah, we're not done. More pain ahead.
Right.
Yeah.
And then the last one is this 20-year or 13-year. This is the market since 2009, since we recovered from the recession. The big recession, the financial crisis.
That's a lot of room to fall.
Yeah. So you can see right up here. So this is why I said before we are in a secular bull market. That started in 2009 or 2013, depending on where you want to start it from.
Yeah.
2013 is when it broke out of the previous high. 2009 is where it started from the low.
Right.
So this is what it looks like. So every time it went up to this top line and came back down and came back to the center line, except for the COVID crash.
Yeah.
Which came all the way down. But in most cases, it comes down to the center line. Right now, that's at about 3,600.
Yep.
And I've been saying for quite a while that 3,800 is probably where we're headed.
Yeah.
And you can see when you put it in this kind of perspective, even though, that last Thursday and Friday felt painful.
Yeah.
And more selling will feel painful.
Yeah.
When you look at it in this perspective, we really haven't even begun yet.
Yeah. The pain hasn't even started. And that's why the 22 multiple, the collapse in earnings, the rotation, more pain ahead. That's what I've been telling folks on my channel for weeks. And some have listened and some haven't. So pretty crazy. Yep. Do you have your newsletter handy? Because a lot of people.
Oh, yeah. Sure.
I looked at it yesterday.
Where is it? Here we go.
Yep. Don't panic. This is just a correction. And then the other one with the bulls and bears. I don't like the looks of this one, Marv. Yeah. You need
surrounded by bears.
Yep. You need to join just to get the cartoons. Lots of great information every week. breakpointtrading@gmail.com.
And this excerpt here that I took out of IBD, I put links in there too, but a lot of people don't always click on the link. So I actually copied this part of the article. Being entirely in cash makes a lot of sense.
Amen.
And the one at the bottom, do not get sucked into a strong market open or even solid session or two. Big gains and bad markets should be viewed with suspicion.
Oh, joys. Any closing thoughts? We're going to get into round 2 where we talk about specific stocks we've looked at over the
we'll look at some that we've talked about in the past and see what their charts look like today. And then I'll talk a little bit about ETFs and some thoughts around ETFs as well.
Sounds like a great third conversation.
But if anybody wants to get the newsletter, it's at breakpointtrading@gmail.com. Just shoot me an email and I'll add you to the list. Awesome. It's free. So if you want to, if you don't like it, you're not reading it, you want to be taken off, or you hate the cartoons, then just let me know.
Nobody hates the cartoons. The cartoons.
Be happy to take you off if you want.
Thanks, buddy.
Be taken off. All right.